you can't control your subconscious mind.
No.
So opening up your phone and seeing blue or seeing red, it triggers something
Yeah,
in
it
your
does.
brain.
When the market's moving upwards, it's incredibly blinding and it's hard to part with that money. You're being emotionally blinded by the numbers and simultaneously emotionally consumed by the candlesticks in front of you.
If you're feeling greed, get out. If you're feeling fearful, get in.
Ignore those numbers and stick to the candles. I'll guarantee you, you'll see far greater results. Hey guys, and welcome back to another psychology series. Now, in this particular episode, we're going to be talking about the impact and damages of numbers when it comes to trading. Now, you may be thinking, what the hell are you guys about to start talking about here? Isn't trading all about numbers? And it is. But what we mean more specifically is the impact of visually watching numbers, especially during live trades. And by numbers, I mean your P&L, your profit and loss. There is nothing more damaging to your psychology by adding more emotions to your trading, by simultaneously watching a live trade or position play out, while simultaneously watching the profit and loss fluctuate up and down. Because trading is very emotional and an emotional skill in itself, which is one of the hardest skills to combat. The hardest part of trading is not having emotions. But if you're constantly engaging in the trading process and elevating those emotions with fluctuating numbers, you're actually significantly increasing the probabilities of altering your trades, impacting the trades whilst they're running, and possibly making some very stupid decisions throughout the process.
Yeah, it's a tricky one with this because, at the beginning, you must be thinking, well, what are you supposed to do? And, when you talk about trading, the technical side, it's hard enough looking at the technical side and not getting emotional, but it's a whole different ball game when you're looking at the profit and loss going up and down. And that can, really, really affect your thinking on a day-to-day basis or trade-to-trade basis. And what we want to do is just highlight that, talk about that a little bit. And I want to throw in a few psychology factors about round numbers that the market works to, and tricks that your mind plays on you trying to make yourself go to these round numbers rather than taking profits at odd numbers, and little things like that. And just talk about a few different things about how, looking at the numbers can be very, very damaging.
Yeah, I think a good example for me to start off with in that particular instance is for crypto, especially because it's very volatile and big moves happen in very small spaces of time. Numbers are elevated in crypto as it is. And the first numbers and series of numbers that are elevated are the prices themselves. So let's say you're looking at the Bitcoin chart, the XRP chart, the Ethereum chart, you see a big bullish candle or a big bearish candle. Well, you are watching the percentage increase of the price difference in itself being significantly more volatile than most other markets. It's no different to almost seeing Forex or stocks during heavy fundamental periods such as non-farm payroll or CPI. And whilst crypto doesn't necessarily react to those as well as like the Forex market, let's say, it often mimics the style of movements and price action that the Forex market, as an example, sees during those highly volatile movements. Now, as of recent, we had two altcoin plays that we took around June, just before the mini altcoin pumps that we saw. Both of those coins achieved 120% and the other one around 137%. Now, I've taken some profits off those coins, but there is a moment I had, and I always have, where I watch my portfolio as that move is taking place. And it's very difficult, I've noticed, and it's something I've taught myself to snap out of and combat and counteract. Well, let's just say the market's jumps now 100%, these coins have in particular. Not only is it emotional enough watching that move take place in a very rapid manner, but when I look at my portfolio down below simultaneously on another tab and I see the profits of the portfolio escalating just as quickly, it's very difficult in that moment to have a rational decision making process because you're being emotionally blinded by the numbers and simultaneously emotionally consumed by the candlesticks in front of you. And it just contributes to the emotions in the mixture. And what I've started to realize, and what I have now been doing for quite some time, is during the period of taking a trade, I try to minimize looking at the actual live positions and portfolio as much as possible. Because at the core of it all, profits will come as a byproduct of successfully analyzing the markets and combating your emotions. Therefore, you don't necessarily need to see the entirety of the move every step of the way. because it also applies to entries. And this goes for leverage entries or spot entries. When you place a trade within the market, it will not always immediately, if it goes in your favor, go in your favor. It can often consolidate, it can often slightly go against you and fluctuate for quite some time. When you're looking at your live positions and seeing the numbers go up and down, the emotions of seeing that capital go into a profit and then drop down to break even, or then even go into a little loss, can subconsciously cause you to alter those positions once they're running. And in theory, if you've made the correct analysis, a lot of the time your analysis is correct and you're probably making the correct projection of where price could go. But there's been many instances for me personally where the live positions and the profit and loss I'm tracking has led me to alter a running position, which has then ended up going off into my favorable target.
Yeah, and I think to second that, very early on, at the beginning of my trading journey as well, is that used to be a big issue because I'd sort of be looking at the charts for my analysis, but as soon as I place a trade, I'd be looking at the profit and loss, and that's all I'd be looking at. You know, if I was at work because I took a trade, and I was at work, I'd be opening my phone, and rather than looking at the chart, I'd be opening up my broker to look at the profit to see how
Yeah.
much I was up, rather than looking at the chart to see what the chart was doing, and what it was telling me about how price was moving. I was more so going to my phone to check the profit and loss. So like I might be up £100, then all of a sudden I'm down to 20. I'm like, oh shit, what have I done? And like, or what do I need to do? Or taking profit, taking that £20, or maybe then doing things like adding more positions which you shouldn't be doing, or even if you're in the loss, then suddenly you're in a loss and then you start doing all these crazy things because I'm looking at the profit and loss going up and down, and numbers are really affecting my psychology, especially when, in trading, if you're in, depends on your broker, if you're in the green or in the blue when you're in profit, but then when you're in a loss, it's red and it's giving you that panic. So then, that's really, really bad. If you're on MT4 on a desktop, at least it's black and it doesn't really show up too much. But most brokers on the mobile, MT4 on the mobile, if you're in profit, it's blue, all feels good. When you're in a loss, it's red. And then, the psychology factor hits. But then I used to look at the profit and loss running, and that used to really sway my decision on what I would do, rather than like looking at the charts cool, calm, and collectively. And I couldn't look at the charts cool, calm, and collectively because I'd looked at the profit and loss first. So that had already triggered my mind into panic mode, and then I'd look at the chart. So then I wasn't looking at it in the correct way. I was already sort of brainwashed with panic from looking at the profit and loss. Whereas now, really, what I do is I take a trade. Our most recent trade is a 13-1, 13% trade on Euro USD. I set the trade. I do look at it to update on members. I look at the charts, but I don't look at the profit and loss. The profit and loss, I have an idea of what it is in my head, but I don't need to see that going up and down and up and down. And it's something that I do say to members, like you have to, with a swing trade, if you want big profits like 13% or 20% on some of our trades, you have to understand profit's going to go up and it's going to go down. But if you're looking at that continuously, and I think it's really bad for crypto traders because I think a lot of crypto traders coming to the market are very fresh, so they're not able to deal with that. Where forex traders, get a bit more used to it years and years in, and they're sort of more designed or set up for trading. Do you know what I
Yeah.
mean? But sometimes with crypto, a lot of people who know nothing about trading at all just get involved,
Yeah.
and when they see the fluctuations, it really affects them. And I think that's why the bull runs are so big and the short selling is so strong,
Yeah.
because people who don't really have much of a trading understanding or history, who have just everybody who's just got involved in crypto, who
Yeah.
doesn't really know how to trade, or don't even look at a chart. We speak about this a lot. There's a lot of crypto investors who have never looked at a chart.
Yeah,
They don't
true.
even know about technical analysis. So then when they see their profits going down, they panic, and that's what happens. So like when we have a trade like the most recent Euro USD trade, 13%, I'm not looking at my profit on my MT4. I don't need to do that. I don't need to, even as a veteran trader, it doesn't really affect me much. But, there's still that possibility. If I'm up X amount, let's just say, for example, 50,000, and the next thing it goes down to 10,000, I don't really need to be looking at that. I know in the back of my head how much it is because I know what 1% is, for example. But I'll just look at the chart and keep calm, understand what's going on, and I won't let myself get tricked or let my emotion come in or my ego come in to play by looking at the figures that are going up and down. So it's very good in trading to try and stay away from that, try and minimize that window, or even, once you place your trade on MT4, close it, and don't look at it on your phone. Some people might not be able to do this, but delete it off the app of your phone. Really should only really trade from a desktop if you can. So you can't look at the green or look at the blue or look at the red changing and flickering and causing you anxiety and causing you emotion, and try and stay away from looking at those numbers and use the charts to your benefit and use them to help you keep cool, calm and collective and stay away from the numbers. And to keep you cool, calm and collective, go back to one of our first or second videos on this psychology, is change those colors on your chart to not give you the same panic that looking at the blue on MT4 or the red on MT4. Don't let that apply to you on your chart by having green candles or red candles, and using the trick that we taught you about neutral colors, so that when you do look at the chart and you're seeing, if you're short in the market and you see a candle move up, you're not seeing a big green candle that looks really strong and bullish. You're seeing a nice calm color, a neutral color move back up, and understanding the market has to trend and you have to let it play out. But by looking at those figures, it can cause a whirlwind of emotion.
You made a very good point there about a lot of crypto traders actually don't look at charts.
Yeah.
And that's crazy.
And I know loads of people who are invested who don't, like, I've got loads of friends who invest in crypto. They don't know what trading view is. They don't know what a chart is. There's, I would say, like, probably 50% of people who trade crypto don't know what a chart is.
That's a very good point, because if you imagine like a Forex trader that didn't look at the charts.
No, there isn't many.
It'd be like, I bought Euro USD today, based on what? Just saw the prices online, but that's actually what crypto traders are doing. And when you think about what their entire basis of their investment is on, it's on
word of mouth.
The numbers they see on a whatever platform they're doing, they're tracking prices, but that's the problem.
Basing it off numbers in the first
place. Entirely, and that goes for the numbers in their portfolio going up and down, and the numbers and prices of the assets they're invested in.
Yeah,
and that's kind of the key behind numbers. And to be honest with you, even when it comes to trading on the charts with technical analysis, although numbers are important and prices consistently reacting from one price point to another and key psychological levels, it's actually quite a good practice to put into place, where once you've done your analysis, create levels and zones, but almost don't pay attention to the numbers too much. I would say this is probably more important in crypto, whereas let's say, in Forex, GBP USD, it's 1.26 random number. You wouldn't see price break that level and everyone be like, the bull run started, GBP USD to the moon. But in crypto, it's very different, where it's like, BTC has broken 50k, this means 100k. 100k is broken, this means 200k. You don't get that in Forex.
Yeah, and it's those round psychological numbers that I mentioned at the start of the video. It's like, why after 50k is broken, why 100k next?
Yeah.
But it's like, there's round psychological numbers that also happen in Forex.
Yeah.
Not the way that we're talking about now, but in profit and loss, that I'll talk about later.
Yeah.
But in crypto, it's all a numbers game in crypto for many.
It's because it's almost measured in milestones of, right, XRP's gone to $2, now $3, now $4. It's going to be 10, it's going to be 20, it's going to be 50.
I've heard that a lot recently. Yeah. Like, even when I think XRP went through $3, I think it hit 340.
Yeah, 360.
But before.
The previous, the first height, yeah.
And then I had people who had who have never seen a chart, people who have never seen a chart before, calling me saying, should I buy XRP at $3? Because it's obviously going to go to 350 next. I was like, where are you getting this from? They're like, well, it's just obvious. It's broke above $3 now. So if it comes back down, it will go to 350. And then it actually fell back down to about 180 or 190. Yeah. I rang them, I was like, did you buy it $3? Right. They're like, no. I was like, I told you.
Yeah.
So, but it's like, for someone who's never looked at a chart, and it's hard for us to actually envision this, and probably a lot of you watching this, it's probably hard to believe that some people that literally do just trade off numbers. But it's just amazing that so many people do.
Yeah, because I guess it's word of mouth as well, isn't it? Like you said, where if everyone's talking about it, it's normally at a very high price point anyway. So you're thinking, right, I bought this thing at $3, not looking at a chart.
Yeah.
I've gone onto my platform, I've bought, there's a little line chart maybe showing you it's just gone up like that.
Yeah.
You're like, fuck it, I'll buy.
Yeah.
And then you just think, well, it's going to go to $4 next, then 5 and
Yeah.
6. And that's literally what happened recently when it got to 3.6 after breaking 3.4, and everyone goes $4
Yeah.
next.
That's what I was told by people
Yeah.
who have never traded before properly and who have never seen a chart.
And then, Lord behold, it drops straight from that point again, because whenever it gets close to those, again, psychological numbers, it will often do the opposite. And to pair into that with what I was saying, especially as a crypto trader, if your technical analysis lines with a sort of psychological number like that, let's say your analysis has brought you to 100K BTC as a high probability area of a turning point, you should not let that number blind you from taking that setup if you see it, because that can affect you. Because let's say you found a potential short setup at $101,000. Psychologically, if you're watching that number and you're simultaneously listening to everyone else telling you that 100K being broken is a very high probability of 110, 20, 30, 40, you could actually miss a potential setup that is often crystal clear at that point in time. It's the same as XRP again, going to around $1.8. It pretty much just skimmed $2. So the fact it had broken $2 had led everyone to now believe that it's over.
Yeah.
Because that was the psychological flaw. And then,
next.
yeah, 150 next. And that's always what happens. It was very similar to FTX in 2022. Bitcoin had broken 20K. Of course, you're going to look at 15K next. But then as we start getting to we just fell short of 15K precisely. But at that point, because 20K has already been broken, the selling pressure increased significantly, and capitulation and realized losses started from there. Because people then start to sell in anticipation of 15K being hit, broken, and then going to 10K.
Yeah.
It's a never-ending cycle. And that isn't being assisted in any way, shape, or form when you're simultaneously looking at your portfolio and the numbers are dropping just as fast. You know, in theory, you would have been better off just holding at that point. But that's what's interesting about crypto, where most of the capitulation occurs and most of people round trip their profits. It's equally at levels where price is at a psychological level, and simultaneously their portfolio is very likely suffering the largest of gains or the largest of losses. It's very interesting how it all occurs in the markets.
Yeah, and what I think about with crypto, because I've got, as I said, from experience, I've got a lot of people I know who invest in crypto who don't have any background. And then I have a few people that I know who trade in Forex who then know about charts and so on. But there's a lot of people I know with crypto, and talk about the numbers side of it, of what we're trying to get across here as well, is that what I find a lot is that it's the profit and loss people try to work toward psychological levels. And they feel like, the market is what it is. It can be very random, but people then think that, they can hold on their profit. Let's just say that you're up a very good amount of profit, where let's say you're up 90,000. People will be like, I'll hold on to, no, I'm not taking profit till I hit 100,000. And like they're looking at the profit and loss, which is the issue we're talking about here, rather than looking at a chart or looking at rationale of where price should go or where it's going to stop or where it's going to turn. They're looking at their profit. So they're not seeing this, and they're like, oh no, I'm not going to take profit. I'm at 90,000 now. I'm not going to take profit till I hit 100,000, not realizing that price has probably hit resistance or something like that, and that price is now about to, like, where they should potentially sell or take profit. But because they're looking at the numbers side, which you're saying is one of the biggest problems you could have in trading, is because you're looking at the numbers, you're letting that override your emotion and your logical thinking, because you're looking at the numbers, and the numbers often in green or blue, but if it's in profit, is making you, bringing those emotions of greed and just making you want to go for more and more and more. But then there's that round psychological figure, which is like everyone wants to hit those round psychological figures. And even in Forex, it's happened to me at the beginning. I remember one time, I've said this once before, I always remember this, I don't know why, but it was like, I remember when I was first started to become profitable, and I think I was like hitting my first £1,000 trade. And I remember I was like, again, I wasn't even looking at the charts. Back then, I was very much more fixated on, as soon as I place a trade, I'd be fixated on the profit and loss. I remember I was at like, I think I was at 500, then it went to 7. And I was like, as soon as it broke 500, I was like, £1,000 next. Because again, that psychological barrier of 500 was broken. And I think in line there, around 600 was my target. But then it was moving fast. It went to 7, 8, and I was at 900. I was like, yes, first that £1,000 trade. And I was watching it fluctuate. It was getting nearly there, nearly there. And rather than just like look at the chart and just understand, right, this is where I should get out, I was paying attention to the profit and loss. And it was nearly at 1,000, nearly at 1,000. Then it went from 900 back down to 700. And then ego kicked in. Then the greed kicked in. I was like, no, I'm not taking 500 or 700.
Yeah.
Like, I need that 1,000. Then it dropped down to 300. Then it dropped down to 2. Then it dropped down. I was like, fucking hell. I've lost all of that just by trying to get that extra £100.
Yeah.
That little £50. I think it got to like 900 or 950. But by being fixated on the profit and loss, on the figures, and not by removing that. If I wasn't looking at that and just looking at the chart, I said, right, target hit, let me take my profit, get out of the market.
Yeah.
But because this thing was flashing and it was blue and it was like moving around fast, all this panic and all this excitement and all this emotion came, and then I ended up losing out on the whole lot for the sake of £50 or £100. So I lost everything.
That's devastating.
I know, I was devastated. And I was just like, what am I doing? And again, we talk about these experiences in our beginning of our trading. Some of them might sound stupid to you. Some of them, you'll be like, I've done that. I've been there, done that, bought the t-shirt. But if you haven't done that, been here, we're trying to tell you these stories to stop you from doing it. And what we're trying to get at is, if I hadn't been paying so much attention to the figures and like had closed the MT4 and just concentrated on the charts, that wouldn't have happened. I would have hit my target, took my profit, I had a very nice day. Instead, I had a very bad, probably week.
But that is the harsh reality for most traders, to be honest with you. And again, especially in crypto, because we're drawn to an attachment of these numbers. So again, going back to like XRP breaking $3, the minute XRP breaks $3, the first thing 90% plus of people likely do in that situation is calculate what their holdings will be worth at $4.
I've been there, done that.
I've done it.
Yeah.
That's how I lost so much money in 2017 because we got to $3.3. The first thing I'd done was I started going, $4, $5. I was like, fucking hell, if it goes to 10, I love this much.
Putting it into Kraken, putting in how much you have.
Sell limits, theoretical sell limits. But that's what I used to do with Forex as well.
I had the calculator out, like, if this how much XRP goes to $5 and try to see the figure.
And it's kind of similar to what we've said about ego, and I've mentioned this probably in a few videos as well, but it's only until you lose that money and that trade goes back to break even, you actually realize the value of what you had. And then you realize I have missed out on 950 quid or whatever it was in your circumstance. For an extra 50 quid.
£50,
£50, you've lost 950. And it's like, you don't realize, because I guarantee you, and I've done this so many times, it's only at that moment where I go, why did I not sell? Why did I not take profit?
But I think, like, that example, I always, when we have our joint live sessions, and I hear you explaining it to members, just having general conversations about when we have taken profit on Bitcoin longs or XRP investments, etc. And you're like, people don't understand that, like, trying to wait for that last little bit is basically the example I gave of waiting for the extra £50. And so many people in crypto do that. I think it's a really good comparison, that like they're not looking at a chart, they're looking at the figures going up, going up, going up, and they, the emotions are overriding them because they've got green, or they're looking at their portfolio, taking screenshots to show people, etc. And it's just pumping, but they're not realizing that they've made, like with our members, thousands of percent. But like, you've already made 1,000%, but what you want to hold for 20% more. And it's literally like that trade, making £950, but waiting for that, of what the value of that 950, waiting for the extra 1% or 5% to hit 1,000, and it all going back to zero is insanity.
It's nuts.
It's by looking at those round figures, your mind it's like that ego is going, wait to 1,000. But I'll tell you what would have happened if it went to 1,000. My mind would have said, all right, 1,500
Yeah,
next.
yeah. It's never enough.
Because if it went through
It's
1,000 and
never.
went to 1,100, I would have said, all right,
Yeah,
1,500 now. And then when it went to 15, I'd be like, okay, with
yeah,
2,000, we could do
yeah.
2,000. I'm sure that this is a story that probably a lot of people have this on a day-to-day basis. But yeah, it's crazy. By trying to just go squeeze out that little bit more, I think
It's
it's a big problem in
yeah.
crypto that
It's
people make that 1,000%. I don't know what we've like. I've seen
yeah,
you make showing that we've made 2,000%, and then it's like, we've taken profit, and people like want to hold that extra 10%, but then a week later it's all the way back down,
yeah,
and you're like, see,
yeah,
now you would have lost 500% of your portfolio
yeah.
for the sake of 10%. It's
Yeah,
insane.
it is insane, and we did actually have that recently on a live where an innovator had bought at I think 16 cents or 15 cents on XRP. They
Oh
were
yeah, I
up
think yeah.
untold amounts of money, and they were waiting for $4. And this was around the time we were at 3.6. It was just around that time, and this is the level we gave you guys in one of the recent crypto outlooks as well, where we said $3.6 could very likely become a top level. And we literally said that exact thing. And the first thing I said to one of our members was, how would you feel right now? Disregard what you believe will happen. How would you feel right now if what you currently have sitting here whilst XRP is at $3.6? What would you think and feel if that dropped down to $2 or $1? Of course, the immediate response was, I would be pissed. I would be upset. I'd be devastated. Whatever the response is going to be, it's always, no, I wouldn't be very happy. But we don't think about that, and we don't process that in that moment, because that particular member was waiting for $4.
$4, yeah.
Clean round number, and it makes
Yeah,
sense.
and
I understand
I
why
think you
he was
said
waiting for
why.
that level.
No, I think you said why, and they
Yeah.
were like, I don't know.
Yeah.
They're like, just because it was $4.
Yeah.
Because of the round psychological, like
Yeah.
the broach 350, it's $4.
And I
next.
don't judge him for that, because I completely understand why he's doing it.
Yeah.
Because it is a logical thing to do. You go, why would I sell at 3.6? So it's not like, I didn't look at him and be like, you're crazy. But at the
We
same time, you
understand
are
it,
crazy.
yeah.
But I've been crazy enough to do that, because I was like, you're up this much. If this drops 50, 60, 70%, you're going to be fuming. But that's what makes selling so difficult, because we convince ourselves that there's always more, and there's always this dream realistic number we want to get out at. But that's also why you don't have to sell everything.
Yeah,
That's one of the keys as well. Even if you took a modest portion of that out and secured yourself, you're covered from both sides. And this is also why we take profits. We don't take the entirety of it, but we always scale out every step of the way higher, because the same way when the market's moving upwards, it's incredibly blinding and it's hard to part with that money. When you engage in that practice of continuously extracting money out the market, you also combat emotions when the market goes the opposing side. And you're less likely to panic sell if the market crashes, because you've taken that profit and protected yourself. Even if your portfolio's dropped, you're not down as much as you would be. So having that little bit of USD or GBP or Euro there, it kind of allows you to hold the rest calmly, because I would have lost all of it in that instance. It allows you to weather the storm as well. But it is crazy how we do these things to ourselves. We're human. We're human.
That's why you can't blame anyone
No.
for this. And in fact, if we spoke about this in a previous video, the ego and the human mind, it's actually by understanding that we are humans, and understanding that we all make this mistake. It's not just one person, two people that make it. Like collectively, 95% of people fail at trading. It's because we're hardwired, we're humans, we just all do the same thing. But the 5% of winning traders are the ones who take accountability and say, okay, well, I understand that us humans can be pretty stupid at times, and we are very like herd mentality. We do things make us all react in the same way. We're all humans, we're all the same in that way. We're all built the same, so we all have the same triggers, etc., etc. But understanding that and then flipping the script is what makes you successful. It's like when you said that 3.6 was likely the top on XRP, and then I think it dropped down to below $3 at the moment. At the time of speaking, I think it's 280, 290. But it's because we know that the market is trying to make you think it's going to $4. And by being experienced in years in the game, we understand what the market is doing, and to look at the chart and not look at the numbers, because looking at numbers will just confuse you and just blind you. But by looking at the charts and having the levels, we understand, okay, well, the market is breaking 350. It's making everyone think, it's so obvious that it's making everybody think $4. Everyone I know who had a bit of XRP said $4, $5. Then the stupid predictions started coming out that it was going to be at like $15 at the end of the year and stuff like that. But I mean, it was like, all it needs to do is break all-time highs, go a little bit higher, and then, then it just changes everyone's mind to look at $4. And but it's only when you know to flip the script and that the market is making you think that on purpose, that you understand, okay, well, this is actually what it's trying to do. We need to do the opposite and sell. But if you're just looking at the numbers purely, then you can't ever think straight, because especially if you're not looking at a chart at all. But hopefully most of you look at, have the profit and loss and have a chart as well. If you're looking at numbers while also looking at the chart, it's a bad combination, because even if you do have the understanding of what we're trying to teach here, and you understand the manipulation in the market, you understand that market is trying to manipulate you to think $4 next, and you've got in your sane mind, that this is probably some manipulation. But then if you look right to the right side of your screen and you see the money pumping, your emotion is going to say, fuck that. Let's look at the profit go up higher, and your brain's going to choose to let this greed override your cool, calm, and collective thinking, because when there's a choice, your brain's going to go for that. So the best way is just to remove that, and then just keep to what you can see on the chart and be calm, and collective. Because if you're seeing these figures flashing up and down, it is going to override your rationale. So you've got to sort of try and remove that. And it can be hard, especially if you're used to it every day. But, in every episode we do, we try to give you something to take away and to practice. And if you are used to trading with, let's just say, split screen in Forex, you've got your charts on one side, you've got your broker on the other side, just try trading with no broker in your view. Just use it to place your trade, close it. And put your stop loss, put your target, close it, and only look at your trading view, and just see how you feel. I guarantee you that will straight away improve. Less anxiety, less emotion. You'll be more relaxed. And if you've got reduce all of those, then of course your critical thinking is going to improve, because you haven't got this sort of, you're not being your heartstrings aren't being pulled by these numbers going up and down, up and down. And even if you think that these numbers aren't affecting you, they are. And again, like a previous video we done with ego, don't think that you don't have a problem. Try these things out. Just remove the numbers away from your screen. Don't look at your phone. Don't check your trade every 5 minutes if you're on the go or if you're at work. Don't look at your trade every 5-10 minutes and look at the profit or loss, because the markets fluctuate. They never go in one direction. No matter if you're in a trade, an intraday trade or a swing trade, the market has to go, let's say you're short, the market has to go down, it has to go up in order to go back down. And it has to go back up, it has to. Nothing goes in straight lines up and down. Otherwise it'd be a very strange market. Things trend. So things have to go up and down. So what's the point in looking at your profit and loss going up and down all the time? Park that up, put it aside. I don't really like to even have my broker on my phone. I like to trade from my desk and not check, because again, as soon as you open up your broker, I'm seeing blue. And even though I'm a bit of a veteran in the game and have experience, you can't control your subconscious mind. No. So opening up your phone and seeing blue or seeing red, it triggers something in your brain, which is why we have neutral colors on the candlesticks. So a takeaway from this would be simply try trading for a week or a month without looking at your broker. Or if you're a crypto investor, just don't look at your phone for like a week, or don't look at your portfolio unless something drastic's happening where you need to check your take profit or something. Look at a chart and understand where price is. Unless something drastically happened, what's the point in looking at your portfolio, refreshing it every 5 minutes or every 10 minutes? Because it's only draining your emotions and draining that your trading battery. Do you
Yeah.
know what I mean?
It is emotionally consuming you, and it's a good point as well about when like the market's pumping up, because when the market's pumping aggressively, especially in crypto, you don't want that candle to stop. But then when you look at your portfolio and your numbers are going up, it's almost reinforcing your idea that it shouldn't stop and it won't stop.
Yeah.
Like when you see the candle going up, but your portfolio is rapidly increasing as well, it almost convinces you why you shouldn't be selling, because it almost associates that candle with the money. But you've got a very good point. In theory, if you've calculated your trade correctly, you've set a stop loss, you've set a TP, there is very little reason to actually look at it
No.
until the trade has either hit stop loss or hit take profit.
Yeah. Why?
That's the best way to do it, because you're more vulnerable and prone to do something very, very stupid in between. But also, something you mentioned is the emotions you feel during these times. And what we're trying to get across here is what you feel in these moments is not incorrect. It's actually the correct reaction and the correct emotion to be experiencing and feeling during these times, like the market breaking a certain level or pumping. The emotions you feel that convince you to feel that way is exactly what the market is intending to make you feel. And the best way to actually combat that is to look within in those moments and realize that you're not alone in experiencing these emotions and thoughts. In fact, at a time where you feel the market's never going to go down again, or it's never going to go up again, you are not alone. And in fact, you are collectively thinking the exact same as millions of other traders out there across the world. And when you realize that at the moments where your emotions are the highest, and you realize you are amongst a large demographic of people experiencing the exact same thing, you suddenly start to realize I'm thinking like a retail trader.
Yeah.
That's the issue. You're not thinking incorrectly. You're actually thinking exactly how you should be thinking in that moment, which is why so many fail, because the markets basically lure you in to feel a particular way before the market goes ahead and does the opposite. So it's very important to identify in those moments. If you're scared to sell, it's probably a very good time to sell. If you're scared to buy, it's likely a very good time to buy, because the market inevitably will do the opposite of where those emotions are the strongest. The same applies to even the Forex trades. A lot of Bernie's trades, these sniper trades that he gives out, they're in very crazy areas where crazy things get price to his entries. And a lot of the times it comes with questions, Bernie, why are we going long when we've got this Goliath bearish candle crashing back down? Lord behold, it ends up becoming the bottom. And we have very similar things with crypto with our buys and sells. The market's pumping upwards and we suddenly push the sell button, but it's such a irrational thing to what we're programmed to feel in that moment.
Yeah.
It seems so unorthodox. When the market's rallying, you should be, and people will tell you in crypto, embrace it, stop being bearish. I'm like, it's not bearish. I just think the market could reverse from here, so I'm taking some money out. And it's like, no, 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 no. Or when the market's crashing and you buy and everyone's like, it's not going up again, it's over, blah, blah, blah. You have to learn to do the opposite of what you think and feel. And sometimes it's good to be emotional to the market in some respect. This is very contrarian to what we're technically telling you guys throughout this series. But in the beginning, when you're at your most vulnerable emotional stage, that's the most beneficial stage to you in theory. Because when your emotions are at the highest, which is almost automatic, the markets are automatically making you feel this way and making you feel this gust of emotions. If you're able to identify this very early on, you will start to realize that at the moment you feel those emotions, you know exactly when to start doing the opposite. And the emotions don't necessarily ever disappear. In a way, you learn to be really ruthless and emotionless in many ways, but there's always a glimmer, I would say, of that emotion there somewhere. For me personally, I would say even when I buy, when there's like the biggest bearish candle you've ever seen and I buy, there's always still a split thought, like, bloody hell, this is really crashing right now. But you just learn not to listen to it because you know from experience.
Experience is just what I was going to say.
And eventually, intuition does play a role as well.
Yeah.
Intuition plays a heavy role in my trading personally.
I think it is. I think you do. The emotion is still there, but
Yeah.
it's the experience. And like, it's very interesting what you've said there about the emotion. Like early on, like I said earlier, no one. We're all humans on like a basic level. Like we're all here on an earth. We're all humans. We're all made the same, and we've all got the same emotions that we go through, the same things that trigger us. And that's why it's so easy for the market to manipulate us, because we're all the same. It's only the 5% that are able to understand that and combat that become successful. The other 95% just keep, you know, being led to the slaughter, like sheep to the slaughter by
Yeah.
the market, by continually doing the same thing. But, you know, at an early stage, and this is again one of the reasons how I learned to become successful, is because one of your best signals for when to get in and out of the market is by understanding your emotions. If you're feeling greed, get out. If you're feeling fearful, get in. A lot of the time, especially
Yep.
in crypto. And as you mentioned with my trades, like when members first join, I do get messages from new members all the time, and they're saying, "Why are we entering this trade? Like it's like a 4 hour bullish or a daily bullish engulfing candle. Like why are we entering?" And I'm like it's in the course sessions. They haven't watched it yet, but I'm like, "Don't worry, just watch." And then bang, next thing they're like, "Oh my god, I can't believe this is up 5% because it's just had a bullish push up into my level, hit it, and then bang." And like I said before, you know, obviously, well, I wouldn't even really say, I actually get excited now when I see a
Yeah.
bullish engulfing candle. So there is a twinge of emotion there when it's really rocketing to my level, but experience tells me I know that I'm going to be right more often than not. When price hits my level, it's usually a very bullish candle, following a strong move up. But then, you know, if you have a sell limit, that's usually what happens, or a buy limit, that's what happens. You know, you need a bullish move up into your sell limit. But then I don't look at the profit and loss. I just look at the chart. I don't have the figures in front of me. I close my MetaTrader because I know what 1% is in my head. I know what 1% loss it is in my head. I know what, so more profit goes in. I know what I'm in. I don't need to look at, you know, it's simple math. If you've risked, let's say, £100 on a trade for 1%, then if you're up 2%, you know it's £200. What
Yeah.
do you need to look at the numbers for? Just close MT4 and look at the chart. But when price moves up into a bullish move up, as I said, emotions, when you're new, you're looking at that bullish move thinking it's time to buy. No, it's time to sell. And that's where my sniper entries come from. And a video we done prior to this video was actually talking about that and learning and how I learned to get sniper entries. But yeah, it's at an early stage, you know, again, in a previous video, we spoke about ego. Also, it's all about looking at yourself and looking inwards, and that's how you become a better trader. And I always say, have a notepad and a pen. And if you really just like understand yourself when you're taking a trade, or when you're looking at the charts, and you can just during the day just write how you're feeling. It might sound weird, but why not? How is this going to hurt you by doing this exercise? If you're looking at, say, Euro USD and you're thinking about selling, but then, you know, the market's moving up and it's turning bullish, you can say, like, at 1:30 p.m., market's bullish. I feel a bit scared about selling. Do you know what I mean? And
It's
then
actually a
see
good
how it
idea.
plays out, and then just look back at these things and say, well, why was I, did it sell off? Was I wrong to be scared? Well, then, okay, you know, that's a signal that the market, like, I need to combat those emotions because the market's making me feel like that. But that's going off topic a little bit. It's easier to do that looking at a chart. But if you're looking at the profit and loss of your trade, it's extremely difficult, and you'll never get away from that, because when you're looking at the figures going up and down, it's very hard to look at the market with a cool, calm, and collective state.
Definitely. I would say to really wrap this up, give it, first of all, try what Bernie said. That's actually such a good idea. You'll probably start identifying turning points in the market based on emotions
On
alone.
emotion, yeah.
That's actually such a good idea. If you timestamp when it begins, you'll probably realize on like an intraday time frame, that's where the reversal begins taking place. And you'll also learn from experience over time. Because if you were to buy at the top of that bullish candle, as an example, you probably will realize 90% of the time, if not more, that'll be exactly where it begins to retrace. So instead of being the buyer in that situation of a bullish engulfing, you learn to become
Be
the
the
seller
seller.
and take the risk, of course, in moderated proportions. But there is actually such a great benefit, especially if you're new to the markets and new to trading, to minimize as much of the profit and loss exposure as possible and focus on the one thing that actually gives you the biggest edge in
The
trading, which
edge,
is
yeah.
the charts.
Yeah.
The charts give you the edge. So when we say, don't add too many indicators because it's additional noise, Well, the worst indicator to physically have is your profit and loss fluctuating up and down.
Yeah.
Because whilst the moving average may not cause any real motion, having your real money at risk and experiencing that money that you know is real money you've worked hard for, constantly going up and down based on your decisions will lead you to second guess, question your decisions, and possibly alter positions as well. You will have a much smoother journey simply flowing from A to B by focusing on the charts independently.
Yeah, and in the trading, over years you have to sort of become a robot and not have any emotion. But using all of these tricks that we're telling you in each video will help you get there. But if you're staring at your profit and loss going up and down on a continuous basis throughout the day, it's going to be very hard to get there. Eliminate all these things mentioned in different episodes, one by one. Practice all of these things. This lesson, remove your profit and loss. Don't look at your crypto portfolio every 5 minutes. Don't have your MT4 running in the background and looking at that going up and down. Remove these outside forces and remove these things out of your view. Quit the emotion, and then help your psychology, and you'll be a better trader.
Stick to the charts and solely the charts. Ignore those numbers and stick to the candles. I'll guarantee you'll see far greater results.
Agreed.
Thank you very much. We hope you enjoyed this video.
And see you on the next one.
See you on the next one.